Good morning. For Traders Exclusive, this is George Kachuk, with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Here we are at the end of October, and the equity markets continue to grind higher. And actually, the equity markets got a pretty good boost last week. It was last Thursday when we got earnings reports from Amazon, Google, Microsoft, and Intel, and they all hit it out of the park, and the market rallied very strong right after that. And it gave a big uplift to the technology sector, and that's continuing. So what I'd like to do is talk about two other technology stocks in the internet content space. They haven't done that well, but it looks like they might be ready to move as well. And those stocks are Twitter, symbol TWTR, and GRUB, symbol GRUB. Now, these aren't buy recommendations. These are some you should maybe perhaps consult with your financial advisor, but let me tell you why we like it. Twitter's basically been consolidating for about 2 years now after being in a downtrend, having trouble at that $20 area. However, if you look at the charts, it showed some very good accumulation basically over the last weeks and months, where the volume's been on the up days been coming in stronger than weaker in the down days. And then last week broke past the $20. That was an area of significant resistance, and it's continuing to hold those areas and move higher. And that's happened on really, really huge volumes. So that's something you might want to consider. Similarly, GRUB, symbol GRUB, has been consolidating for about a year now. It has these gap ups, move sideways, another gap ups, move sideways, and it's had another gap up last week on earnings. And again, it's holding those levels above $57.60. It's trading about $60 now, and those are the areas, those resistance areas that I would use as a stop. So if it were to continue to higher, you can hold on to it. But if it were to fall below the $57.60 area, perhaps the trade might not work, and it's not ready to move again, and it'll still continue that sideways consolidations. However, the last few consolidations have gotten tighter and tighter, so that's a good sign of accumulation. And with the whole technology stocks going forward, this may be a trade maybe for you. But again, consult your financial advisors. These are not buy recommendations. So, as always, let price and volume be your guide. This is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.